are literally shaping the planet.
Purpose is the only pathway to a regenerative future.
We have a choice to stay with the status quo or to change.
What is the point of trying to be just resilient when we can actually innovate?
We're going to talk today about corporate venture capital and ESG goals. And I've had a lot of people say, what is ESG? And we'll get to that. But I think the best way to think about this is, regardless of industry, we are all consumers. And on the one hand, we know we want to do the right thing and buy that, good for the economy brand. On the other hand, we're not willing to sacrifice taste, quality, value. And from a business perspective, I've always loved the idea of doing well by doing good. But as an investor, I also care about profits. And frankly, profits matter, even for the green businesses and the businesses that are doing good, because we want them to be ongoing businesses. So today we'll explore a little bit about how venture capital can help corporations achieve some of these goals. So to start with, more corporations are becoming investors. I don't think anybody is surprised by this concept. From 2014 to 2018, the corporate venture capital funds more than doubled, and that number just continues to increase. That's because, industry aside, you're really seeing disruption happening across the board. The study by Russell Reynolds was done in 2017. If you had looked back a few years in 2017, you would have seen the industrial said 38% needed to improve. There was disruption happening, and 59% of tech companies were saying that disruption was happening. So you can see that's just increasing, and we expect it will continue to increase. In the US, over a quarter of the US venture capital transactions included a corporate venture capital investor. So not only are the numbers increasing, they're putting their dollars to work, and they're being invited or welcomed into more and more syndicates because of the value they can create. And we'll talk a little bit more about that down the road. So why is that? Well, for one thing, we all know that venture capital is all about innovation, and for corporations, CVC drives innovation. Almost all executives say that innovation is important, but equally, almost all executives say that they're dissatisfied with innovation programs. So when Nagaraj Kashyap was at Qualcomm, he said, investing in startups is one avenue for increasing our innovation lens, and we think more and more corporations are starting to do this. CVC can also drive impact. So when Amazon announced its $2 billion climate pledge fund in June, it was following in the heels of Citibank, Microsoft, Comcast, Salesforce, and a whole slew of other venture capital funds, financial-only funds, that really are making the bet that innovation can help drive the carbon challenge that we're having. So, by these corporations launching these funds, we really think that they're signaling that innovation can help drive the change. So before I get into, sorry for the background noise, before we get into why we think these funds are both good business and good for reducing the carbon footprint, I think we should take a step back and explore what all of these different terms mean. There's lots of things out there: ESG, CSR, D&I, DEI, stakeholder capitalism, shareholder capitalism, environment, and what does it all mean? They're all important, and I think the three that are most relevant to corporations are CSR, DEI, and ESG. CSR is the corporate social responsibility. This is really about the company's pledge through policies of how they're going to impact economic, social, and environmental issues. DEI is diversity, equity, and inclusion, and these are programs and policies that companies put in place to encourage better representation, encourage more of this. The good news is this is not just a feel-good. Increasing research shows that diversity really drives better performance. And then ESG are environmental, social, and government metrics. These are traditionally have been non-financial metrics, or they are non-financial metrics that measure how investors are screening investments for that. The biggest challenge in the past has really been, how do you measure these things? And there's been a lot of debate over shareholder capitalism versus stakeholder capitalism, but you're seeing now from research that ESG factors are not just nice to haves. There was a Crunchbase article earlier this week where it talked about how investors are rewarding companies that have a lower carbon footprint. So for example, it called out Exxon versus Google. In 2013, the Google market cap was lower than Exxon. Today, Google's market cap is 6 times higher than that of Exxon. In fact, Exxon was taken off the Dow Jones in the summer and replaced by Salesforce. Beyond Meat versus Hormel. Beyond Meat is a $9 billion market cap, which is about a third of Hormel's, despite the fact that Hormel has 20 times higher revenue. So increasingly, investors are recognizing that low carbon footprints really do matter. We really believe that innovation can power ESG goals. Here are just a few of the different things in innovation that are happening that really can help corporations and the goals that they set forth for themselves. It may come in the form of new materials, ingredients. Circular economy is picking up waste and reutilizing that, both driving profits and benefits for the economy and society. Transparency and tracking is a really important one, which we'll talk about a little bit more. Novel deliveries, we're moving beyond sort of the traditional thinking of technology-powered delivery to new forms. And then we're seeing real paradigm shifts in processes and the way that we do business. IoT and data and digitization are also very important goals. So very important tools, I should say. So why is this? Well, first of all, VC is a long game, and so is ESG. You may or may not know this from looking at the stock market, but shareholder value also can be a long-term goal. Sometimes we get very focused on the short term, but long-term really is important. And I think we're seeing that by the valuations that are being rewarded to different companies. But sometimes it takes time to create new processes or drive new materials. And so by using venture capital, corporations are able to keep it off their balance sheet, keep it off of their P&L and tinker and experiment and really learn, but then also apply their expertise. Startups are lean, they're hungry, they're nimble. They're able to pivot, they're able to shift, and they're able to experiment in a way that corporations simply can't. However, corporations are uniquely positioned to help accelerate these technologies and provide advice and talk about how it's done today and where there might be opportunities to shift it. So the combination of the two can be very powerful. So let's just look at a few examples of how ESG, environmental, societal, and governance goals can be supported by innovation. First of all, in construction, you're seeing new materials like cross-laminated timber, improved processes around that help with safety. They help save money, and they make sure that the sub's time is managed effectively so they stay working. In manufacturing, data-driven R&D can accelerate the process. You may have new materials being created and tested as a result of technology much faster than has been done before. And then new processes, shifts in how we think about sourcing and manufacturing, more localized, hyper-local, using different tools like robotics and 3D printing. In Agtech and food regeneration, technology is helping to bring food into the food deserts. They can benefit from vertical farming, and IoT and different sensors are helping the fields to make sure they're optimizing for the crops that are coming from them. Companies are also focusing on food waste, turning profit while helping the people and the environment they're benefiting. Companies like Regeneration, Regrained, I should say, which is taking beer grains and turning them into snacks. Societal goals can relate to people, process, and products. And innovation can help here too. For example, blockchain helps enable more transparency. You can track and trace where food's coming from if there's an outbreak or if there's a salmonella outbreak, or in our current environment, if there's a need to track and trace a pandemic. And as we've seen recently, improvements in the supply chain would benefit society immensely. And then thinking about novel delivery, it's really beyond e-commerce or online education. Technologies helping mental health. For governance, this requires a whole new set of metrics. If you recall, I talked about ESG as a set of non-financial metrics. And so tech can really play a starring role in the governance conversation. First and foremost, you've got digitization. Not only is this helping companies do things more efficiently, doing things online, using technology to run their business, but it also increases access to data and increases capture of data. Most companies will tell you there's no shortage of data. They're drowning in data oftentimes, but a lot of that data that they previously wouldn't have collected is now available, and they're trying to make sense of it. So tools like AI, artificial intelligence, and machine learning are helping to make sense of this data and identify signals that they may not have others seen. And finally, and frankly, I think most importantly, technology increases visibility. It's very difficult to measure some of these non-financial goals. There's lack of benchmarks, little transparency. And with technology, we can start to create those benchmarks, increase transparency. And frankly, your customers see it too. So it matters, and not just because it's the right thing to do, but because it actually does drive sales. Customers are voting more and more with their dollars because they're able to actually see behind the curtain. With technology, as visibility increases, you're able to measure more things, more data is captured and stored, and the metrics can be improved. So much as Peter Drucker said, if you can't measure it, you can't improve it. So that's it. Any questions?
Everybody, feel free to put your questions for Kindra in the chat or the Q&A. At the bottom of the screen, hit that button and put them in there, and we can get those answered if there are any.
Okay, great. I think that means there's no questions.
Okay, very good. Well, Kindra, thank you so much for the presentation. It was very informative. I appreciate you taking the time to share that knowledge with us today.
Great. Thanks so much. Bye-bye.